There is $2,100 sitting in a Medicare account with your name on it, and if you don't claim it before June 30th, it is gone. Not delayed, not moved to next year. Gone. Before I show you exactly how to get it back, I need to warn you about 3 things that Medicare does not want you to know. And I mean that literally. There is no financial incentive for them to tell you any of this. I will explain exactly why in just a moment. The first thing they are not telling you. Most retirees are overpaying their Part B premium by anywhere from $50 to $200 every single month. Not because of fraud. Not because of a mistake you made. Because of a 2-year-old income figure the government is still using to calculate what you owe today. The second thing. There is a surcharge called IRMAA being silently deducted from your Social Security check every single month. Most people watching this right now have never seen that word on a single piece of mail. And yet it may be costing them more than $1,500 a year. The third thing. The one that got a retired school teacher from Ohio a $4,200 refund, I am saving for later in this video. Because once you understand it, you will know exactly why your insurance company has never once mentioned it, and you will not be happy about that. In the next 18 minutes, here is exactly what I am going to show you. What this premium refund program actually is and who qualifies. The specific triggers that cause retirees to overpay without ever knowing it. 4 moves you can make right now to recover that money or stop losing it going forward. And the June 30th deadline that makes all of this urgent today, not next month. The refund is real. The deadline is real. And the reason nobody told you about this is exactly what this video is about. My name is Marcus Graves. I am an enrolled agent. That means I am federally licensed by the United States Treasury Department to represent taxpayers directly before the IRS, not a financial advisor. Not an insurance broker, an enrolled agent, which is the highest credential the federal government issues for tax representation. I have spent 14 years helping retirees recover money that the system quietly took from them. Not through lawsuits, not through public complaints, through the specific forms, deadlines, and appeals processes that already exist inside the system, but that nobody explains to you in plain English. Here is what you need to understand about why that is. Your Medicare Advantage insurer earns more revenue when you stay enrolled at a higher premium tier. There is zero financial incentive for them to tell you that you qualify for a reduction, not a single dollar of incentive, so they don't tell you, and they never will. If your income dropped in the last 3 years, a spouse passed away, you stopped working, you sold an asset one time, you may be the most important person watching this video right now. And if you are doing well financially but had one unusual year of higher income a couple of years back, Medicare may be punishing you for a financial situation that no longer reflects your life at all. I am not here to sell you anything. I am here to show you the specific paperwork that gets your money back. Let me tell you about a woman I will call Patricia. Patricia is 68 years old. She spent 31 years teaching art at a middle school in Columbus, Ohio. She retired with a modest teacher's pension and a Social Security check of $1,640 a month. She owns her home outright. She is not wealthy, she is careful, responsible, and she did everything right her entire working life. Back in 2021, Patricia's husband Gerald made a decision that made complete financial sense. They had held a small rental property for 22 years. Gerald was in his late 62nd. Managing the property was getting harder. The market was strong. So they sold it. The sale generated $74,000 in capital gains. They reported every single dollar. They paid every dollar in taxes. Completely legal, completely ordinary. Exactly what responsible people do. Then Gerald passed away in early 2022. Patricia grieved, adjusted, and kept going. She figured her finances were stable. She had her pension. She had her Social Security. She had her Medicare. She thought she was fine. What Patricia did not know was this. 2 years after that property sale, Medicare looked at her 2021 tax return. The year of the sale. The year Gerald was still alive. The year their income was at its highest. And used that number to decide what Patricia owed for Medicare today. Her Part B premium jumped from $164.90 a month to $297.00 a month. That is $1,584 in extra charges every single year, quietly deducted from her Social Security check before she ever sees it. Patricia noticed her check seemed a little smaller than she expected. She called Medicare. They told her, "Your premium is based on your 2021 tax return. If you have questions, contact Social Security." She called Social Security. They told her, "Your premium is set by Medicare. If you have questions, contact them." She was passed back and forth between two federal agencies until she gave up. Patricia did not make a mistake. She did not do anything wrong. She sold a property once, reported it correctly, paid her taxes, and then watched her husband die and her Medicare bill quietly go up. And not one single agency ever told her there was a two-page form she could file to fix the entire thing. By the time I first spoke with Patricia, she had already lost $3,168 in excess premiums. And the June 30th deadline was exactly 3 weeks away. I am going to tell you what happened to her before this video ends. But first, you need to understand the exact mechanism behind this problem, because there is a real chance it is happening to you right now, and you have no idea. The Medicare premium surcharge I am talking about is called IRMAA. That stands for Income-Related Monthly Adjustment Amount. It is governed by the Social Security Act, Section 1839, and updated by the Affordable Care Act. It is administered jointly by the Centers for Medicare and Medicaid Services, CMS, and the Social Security Administration. Here is how it works in plain English. Every year, Medicare looks at your tax return from 2 years ago. They look at your modified adjusted gross income. That is your total income from all sources combined. Social Security, pensions, dividends, capital gains, IRA withdrawals, everything added together. If that number crossed certain thresholds, Medicare adds a surcharge on top of your standard Part B premium and deducts it directly from your Social Security check before you ever receive it. For 2025, the standard Part B premium is approximately $185 a month. But if your income 2 years ago crossed $106,000 as a single filer, your premium jumps to $259 a month. Cross $133,000 and it becomes $370. Cross $167,000 and it reaches $480 a month. That is nearly $300 more per month than the standard rate. For income, you may not even have any more. And here is the part that surprises almost everyone. Medicare cannot see last year's taxes yet, so they always use a return that is 2 years old. If 2023 was a high-income year for any reason, and I mean any reason at all, your 2025 premium is already being affected by it right now as you watch this video. Here are the 7 most common triggers that cause retirees to overpay. Go through this list carefully, because one of these may be your situation. Number 1. A one-time property or asset sale. Selling a home, a rental property, or an investment creates a spike in your income for that year. Medicare sees the spike but has no way to understand it was a one-time event and not your normal income. Example: a 70-year-old woman in Arizona sells her late husband's second home. The $90,000 gain puts her in a higher IRMAA bracket for 2 full years, even though that money is long gone. Number 2. Death of a spouse. When your spouse passes away, you lose the married filing jointly tax threshold and drop to single filer brackets. Single filer thresholds are roughly half as generous. Your income may actually be lower than before, but your IRMAA threshold just got cut in half overnight. Example: a widower in Michigan goes from a joint threshold of $212,000 to a single filer threshold of $106,000, with no change in his actual income at all. Number 3. Required minimum distributions beginning for the first time. At age 73, the IRS requires you to begin withdrawing from traditional IRAs and 401k accounts. Those withdrawals count as ordinary income. A large first-year RMD from a well-funded account can push you into a new IRMAA bracket immediately. Example: a retired engineer in Texas takes his first RMD of $48,000. Combined with Social Security and a small pension, he crosses the $106,000 threshold for the very first time and gets hit with an IRMAA surcharge he was not expecting. Number 4. A Roth conversion in a single year. Converting money from a traditional IRA to a Roth IRA is a taxable event in the year it happens. Medicare treats it as ordinary income, and 2 years later, your premium reflects it. Example: a couple in Florida converts $80,000 to a Roth in 2023. Their 2025 Medicare premium increases by $1,800 per person. That is $3,600 total for a financial move that was completely legal and actually smart long-term. Number 5. A Social Security retroactive payment. In certain situations, the Social Security Administration pays several months of retroactive benefits all at once when you first claim. That lump sum counts entirely as income in the calendar year you receive it, even if it covers months from the prior year. Example: a 67-year-old woman in Georgia claims Social Security and receives a $9,400 retroactive payment in December. It appears as an income spike on her return and follows her into Medicare 2 years later. Number 6. A business sale, buyout, or severance package. Any final payout from a business, partnership, or corporate exit generates recognized income in that year. Medicare cannot distinguish a one-time exit payout from a regular salary. Example: a 62-year-old sells her share of a dental practice. The $200,000 payout is waiting for her when she enrolls in Medicare 3 years later. Number 7. Investment income from mutual fund distributions. Even if you never sold a single investment yourself, mutual funds often distribute capital gains to shareholders at the end of the year. Those distributions appear as capital gains on your return, income you never actually chose to take. Example: a retiree in Pennsylvania holds a mutual fund that distributed $18,000 in capital gains in 2022. She made 0 trades herself. Medicare counted it as her income anyway. Now here is the documented proof that this is not rare or unusual. In 2019, the Medicare Rights Center published findings showing that thousands of beneficiaries were being incorrectly assessed IRMAA surcharges based on outdated or incorrect income data. The Social Security Administration's own Inspector General has reported repeated errors in IRMAA determinations on the public record. Fewer than 10% of affected enrollees ever file a formal appeal. Not because they don't qualify, because nobody tells them the appeal exists. The system is not checking its own math. That is your job, and I am about to show you exactly how to do it. Here are 4 specific things you can do right now. These are the same strategies I walk my own clients through. None of them require a lawyer. All of them are available to you directly. The first move is to file Form SSA 44. This is a 2-page form you file directly with your local Social Security office. It asks Medicare to use your current income or your most recent income instead of the 2-year-old return they are currently using against you. You document what is called a life-changing event. Medicare defines 8 qualifying events: death of a spouse, marriage, divorce, work stoppage, reduction in work hours, loss of income-producing property, loss of pension income, and receipt of an employer settlement. If any of those apply to you in the last 3 years, you may qualify to have your premium recalculated immediately. The premium reduction ranges from $74 to over $400 per month, depending on which bracket you drop out of. You can download Form SSA 44 directly at ssa.gov and file it in person at your local Social Security office with supporting documents such as a death certificate, a final pay stub, or your most recent tax return. If you are a surviving spouse and you have not filed this form, this is the single most important thing you can do before June 30th. The second move is to request a formal IRMAA reconsideration. This is different from SSA 44. This is for situations where Medicare did not just use old income, they used the wrong income. Errors are more common than people realize. SSA sometimes uses preliminary tax data before an amended return was filed. They sometimes apply the wrong filing status. They sometimes fail to update records after a corrected W-2. If any of those situations apply to you, call SSA directly at 1-800-772-1213 and use the word reconsideration. They are required by law to respond within 60 days. If they deny your request, you have the right to a hearing before an administrative law judge. You can also start the process at ssa.gov/appeals. If you filed an amended tax return in the last 2 years, stop right now after this video and confirm that SSA has your corrected figures on file. Many people assume the IRS and SSA communicate automatically. They often do not. The third move applies specifically to retirees on fixed or limited income. It is called a Medicare Savings Program. There are 4 of them, and they are federally funded programs administered through your state Medicaid office. The most comprehensive is called the Qualified Medicare Beneficiary Program, or QMB. If your monthly income is at or below approximately $1,235 as an individual, QMB can cover your Part B premium entirely, plus your deductibles and copays. The next level is called SLMB, the Specified Low-Income Medicare Beneficiary Program, which covers your Part B premium if your income is up to about $1,478 a month. Above that is the QI program, the Qualifying Individual Program, which covers your Part B premium up to approximately $1,660 a month in individual income. Applying is free. You apply through your state Medicaid office. You can find your state's office at medicaid.gov. If your income is anywhere near these thresholds and you have never applied, you may be leaving $2,220 a year on the table, every year. The fourth move is the long-term protection strategy. It is called strategic income management, and it means structuring your withdrawals, your Roth conversions, and your investment sales across multiple years to keep your modified adjusted gross income below that first IRMAA threshold of $106,000 as an individual. There are 3 specific tools inside this strategy. First, spread Roth conversions over 3 to 5 years instead of doing one large conversion in a single year. Second, time asset sales to straddle 2 different tax years, rather than taking the full gain in 1 year. Third, use what is called a qualified charitable distribution from your IRA to satisfy your required minimum distribution without that amount ever hitting your taxable income. The IRS allows up to $105,000 per individual per year in QCDs as of 2025. If you are charitably inclined and you are taking RMDs, this one strategy alone can keep you below the IRMAA threshold and save you thousands in Medicare premiums every single year going forward. And here is how to combine these moves if you had a one-time income spike 2 years ago and your income has since returned to normal. Step 1. File SSA 44 immediately to request a reduction based on your current income. Step 2. Call SSA and confirm they have your most recent tax return on file, especially if you filed an amendment. Step 3. Going forward, use QCD distributions and multi-year Roth conversion planning to make sure you never cross into the first IRMAA bracket again. That 3-step sequence is exactly what Patricia eventually did. Before I tell you how Patricia's story ended, I want to flag 3 specific situations where your risk is higher than average. First, if you are enrolled in a Medicare Advantage plan. Many people in Medicare Advantage believe their monthly plan premium is the only thing they pay. It is not. Your Part B premium is still being deducted from your Social Security check separately and invisibly, even while you also pay your Advantage plan premium. IRMAA applies to that Part B premium regardless of which plan you are in. Go to ssa.gov and log into your My Social Security account. Look at your benefit statement. See exactly what is being deducted before your check is issued. Many people are genuinely shocked by what they find. Second, if you are between the ages of 63 and 65 and approaching Medicare enrollment for the first time, the income Medicare will use to set your very first premium is based on your tax return from 2 years before enrollment. For many people, that is the final year or 2 of full-time work, often the highest income years of their life. You can pre-file Form SSA 44 at the time of enrollment if your income has already dropped. Almost no one tells new enrollees this is possible. Third, if you are a surviving spouse who has not yet formally notified SSA of your spouse's death and filed SSA 44. Medicare does not automatically update your income bracket when a spouse dies. You must notify SSA of the death and separately request a new IRMAA assessment based on your new filing status. Widows and widowers are sometimes assessed IRMAA surcharges for 18 months or more after a spouse's death before anyone catches the error. SSA will not proactively correct this. You have to initiate it. Now let me tell you what happened to Patricia. 3 weeks before June 30th, Patricia came to me through a referral from her neighbor, another retired teacher who had gone through a similar situation the year before. Patricia brought her 2021 and 2022 tax returns, Gerald's death certificate, and her most recent Social Security benefit statement. We filed Form SSA 44 on a Thursday afternoon. The form documented Gerald's death as a qualifying life-changing event and used Patricia's 2023 income, $31,400, as the basis for her new premium assessment. 6 weeks later, Patricia received a notice from SSA. Her monthly Part B premium was reduced from $297.00 to $185.00, and the reduction was applied retroactively to January of that year. Patricia received a credit of $4,176. She did not receive a check. SSA applied the credit going forward, increasing her monthly Social Security deposit by $112 for the next 37 months. When I called to tell her, she was quiet for a moment. Then she said, "I feel like I got a raise." Gerald would have loved knowing that. And then she said something I want you to hear clearly. She said, "I kept thinking someone would have told me if I was owed money. You showed me that's exactly the wrong way to think about it." That is the one sentence I want you to take out of this video today. Nobody is going to send you a letter telling you that you are owed a refund. CMS does not send refund notices. SSA does not flag your account. Your Medicare Advantage plan has no reason to bring it up. The only person standing between you and that money is you. The average annual IRMAA overpayment among retirees who qualify for a reduction but have never filed an appeal is $2,100. That is the number I opened this video with. And now you know exactly where it comes from and exactly how to get it back. The deadline is June 30th. I have put together a free 2-page checklist that walks you through every step of filing Form SSA 44, requesting a formal reconsideration and checking your Medicare Savings Program eligibility. It is at marcusgraves.com/checklist. No email required, no sign-up, just the step-by-step guide in plain English. One last thing, if you know someone over 60, a parent, a sibling, a friend who recently lost a spouse, send them this video right now. Not because it is interesting, because it might be worth $4,000 to them. That is a real gift you can give someone today at no cost to you. The system is not broken. It is just not built to work for you. That is why you have to work it yourself. I will see you in the next one.